Welcome back, traders. Second portion of our show, market movers. We got some moving up and some moving down, but it looks like all those analysts, Dennis, that were upgrading Cisco Systems got it right.
And Goldman Sachs, remember we were even talking about that. Looks like two good quarters in a row for Cisco. Hooray, hooray, after those disaster quarters. I think they had 4 consecutive misses. Now they've had 2 consecutive beats, so good for Cisco. Trading up $1.23, 1884, which is actually breaking out over that 1855 area. That was the high of the move that we just set there last month. So I'd probably use that 1850 area for a decent swing number. What do you think on Cisco, Joel?
Cisco. Well, it's up quite a bit here. I'd have to give you the pre-market high is right in this area. Actually, the pre-market high is 1888. So I'd keep an eye on that 1888 to $19 level. Even though there's really not much in the charts to support that, it looks like we're busting through this level here. There's a big gap area going up to 2234. But I think with this one, Dennis, it's just going to be, whether people want to, buy, hear the news and then, sell the stock, or, people are going to be looking to just buy this thing and initiate new positions. My instinct tells me you're going to run into some sellers here since this stock was at 1330, only back, a few months ago.
Yeah, it's been a pretty good run back here for Cisco. But it is a value stock as opposed to some of these other ones, which we're going to get to in a second, Green Mountain. But, there is some value here in Cisco. So I think some of your value investors are like, look, they've punished Cisco for a long, long time here. There is value here. So when they start to beat, it's like your value stocks don't have to beat by that much to go up. But your momentum stocks need to be by a lot to not go down. And let's just move on.
One quick note on that. Momentum stocks can beat and still get punished.
Exactly. So that's the difference. So you just know when the earnings, the fundamentals come around, when the guidance is really, not that, great to begin with, you don't have to really beat by much to, to actually get a pop. And Cisco obviously beating by just a few cents here, but getting a nice pop.
How's your Green Mountain Coffee short?
This is one, obviously Einhorn came out there, David Einhorn came out there a month and a half ago talking about GMCR, basically saying, he's seen accounting issues with this, and basically the stock fell from 90 that day to under $80. The stock pops back into the mid-80s, and I'm looking at that thinking, that Einhorn kid, he's usually right. And I'm looking at it, I was like, I should just short, a couple hundred shares here and hold it, because I wouldn't be surprised, I even said this to the other couple traders, I wouldn't be surprised if this thing's $50 by the end of the year. I should just put a couple hundred shares or a few hundred shares on, ride it down, and not look at it. Well, you get tired and you start doing different things and you forget about it. Well, the Einhorn kid's right again, and here we are trading $47. You just gotta follow that guy. What he does, just put it on and forget about it, because it seems to work. Anyways, stock absolutely destroyed today. Down 29%. This was a coffee, they make the, I'm not exactly sure specifically, but I know they make like the coffee machines, I think, or something. And, basically, it's had a PE of like 68 on the thing. So you just look at that too and you think eventually this bubble's probably going to burst, and the bubble burst in a big time way there last night with that earnings report, Joel.
Yeah, we got down to 43.26 here in the pre-market, down a considerable amount, so I would use that 43.26, probably already up to $44 would be pretty good support. A lot of times you do not see the stocks hitting the pre-market lows. I would hazard a guess that this would be one that won't. Below that, looking on the charts, $40 was just the low in the month before it just accelerated. Just on a side note, my daughter, when she went up to school, got one of those Green Mountain coffee makers, and she was home last weekend, and she said to me, "You know what, Dad? I hate that thing, man. The coffee stuff."
Why did you tell me?
I didn't tell you that, man. She goes, "Can you give me one of those, 1999, Joe DiMaggio Mr. Coffee things?" And I'm like, You know, you never know, folks. That's one thing about trading. We can talk about all the technical and the fundamental analysis, but it's sometimes the clues that you get just from walking in a store or listening to your daughter can be some of the best trading advice you'll ever get.
That's great, Joel. We do have some other movers here this morning. Kohl's, KSS, getting a pretty good lift here, trading $56 right now after reporting their earnings here this morning. Stock closed 54.29, so it is up $1.71. I see a little bit of resistance in this 56 area on the chart. Obviously, there's major resistance up at 58 there, which is the 52-week high on the year. But we kind of topped out in these mid 56s here a couple of times back in May. Got up to the 57 area in mid-July. This has been a heck of a run for Kohl's too. It's been, straight down from July to September, bottoming out at 42.14. It's run all the way back up to the top end of its range. So there's major resistance up here from 56 to 58, kind of all over the place for you swing traders. Maybe Joel can give some day trading numbers.
Yeah, really consolidating here at the $56 level. I do see a high back on November 7th at 56.63. That will put the stock up well over $2 on the day. So let's call this 56.50 to 56.63, an area where you certainly want to access some longs and perhaps looking at shorting this stock, since we already have it up 3%, making a pretty good move. Just looking at this pre-market chart here, if this thing could not hold 56, I'd get out, man. I would get the heck out and look for it to fill the gap to yesterday's high at 54.99.
PEGA, not having a good day. Down $7 here, Joel. 37.04 close, trading 30.11. The software maker reporting earnings last night. They're not good at all. I think I would probably see some support at 28.16, which is your old 52-week low. Maybe 30 becomes a psychological support level that gives you a first stopping point. What do you think on PEGA, Joel?
PEGA is getting pegged. Holding $30 here. Not too long ago, we revisited a low back in October here at 29.02, and then of course that 52-week low at 28.16. So those would be the stopping points. Once again, you have a $30 stock down $7. If I was shorted, I would certainly look at, to bring some in here, between the $30 and the $28 level. And it's evidenced by the pre-market activity. Someone else has that opinion as well.
OpNet Technologies, which is OPNT. Stock closed at 45.36, trading 39.25 here this morning. Stock is getting beat up pretty good. It's had a heck of a run, Joel. The stock has been running up for the last month and a half. Bottomed out, if we go back into August, in the 28.50 area. It just ran straight up all the way to 47.96 just a couple days ago. Pulling back here, I look at this $40. I think that's probably a key swing area for the stock. Major support down 35. That's a ways down. So maybe 40 is your first stopping point. What do you think on OpNet, Joel?
Yeah, not a lot of volume associated with this trade. We had some trades going off at 40.5, so I would use that as resistance. I do see a cluster of lows here right around the $38 level. In fact, you had 3 consecutive lows, 37.70, 38, and 38.15. So let's just call that the $38 level. Look for support there. And once again, resistance up to 40.50 level.
We may as well talk about all these leveraged ETFs. We got Direxion, which has a number of leveraged ETFs, are doing 1-for-5 reverse splits on a pile of these today because all of those things have just drifted lower and lower and lower. The overall problem with these leveraged ETFs is they rebalance every day. If you've got like a triple long, at the end of the day, they need to rebalance to stay triple long. So what it basically does in the long run, it tracks the daily movement, not the overall longer-term perspective of the index. So if you buy, the FAS thinking, I'm going to buy today and next year if the market's up 10%, I'm going to be up 30%, it just doesn't work that way because it tracks the daily movement. So they're rebalancing all the time. So it's incurring costs in those rebalancing. And also it basically is opposite to volatility because if it's going up, they're always buying more when the market's going up and always selling more when the market's going down. So it's kind of momentum trading almost too inside of that. So these things are very, very very difficult to own long term. And I just want our listeners to be aware that these things will not track in the long term. They only track daily movements. They're great intraday trading vehicles, but don't hold them longer. Don't be trading these things, longer than really 1 day time horizon.
It's just like an option. It's just erosion.
It just does, Joel. It just continues to erode, and that's why you see all these things have to do the reverse split. These are really like, you hate to come out and say like toxic vehicles, but they're great for day traders. You can use them as day trading tools. So that's what they're designed for. That's what they should be used for. If you're holding these things overnight or holding them longer term, I think your capital eventually gets eroded. So, and they're always tricky to short too, because there's huge short premiums and borrowing fees on these things too, which makes it difficult as well. But I think we should just be aware, and it's a good point here just to make, because the things are all reverse splitting here today. There's 5 or 6 of them reversing. So that's something for our listeners to be aware of. Just to close, I think we should talk briefly about Disney. Does report earnings after the bell, Joel, so that could be your market driver here for tonight's session and obviously tomorrow. What do you think about DIS, Joel?
You know what? Kind of just floating in here between 33 and 35. 33.51, that was the low back on the first of the month, and 35.13, 35.01, 35.17, were some highs. So you did, I don't know, this thing's just range bound. I'd call it, between, 33 and 35.5.
That's all I've really got for you today. Obviously, Euro banks are bouncing back pretty good today. Some of your U.S. financials may have some relative strength because of that. It is kind of a financial bounce. So, if we're up 1.3%, maybe some of your financials are up 2 or 3% today. That's really all I've got. Anything you want to close with, Joel?
No, just back to the S&Ps here, just kind of meandering out around the daily pivot. Look for a challenge of the Globex high, and also yesterday's intraday high at 1249.75, or 12.49 and a quarter. If we do go into a sell-off mode here, there's not a lot of support down to the 1231 area. Well, that's our show for today, folks. Hope we've given you some good information, and we'll be back with you tomorrow.